Hi, audience. Welcome back to Kenstone Capital. So, as most of you have asked one question, which was very frequent, that what is the difference between personal loans versus credit cards? So, today we have Director of Kenstone Capital, Nikhil Shetty, sir. So, let's ask him only the difference between both. Hi, sir.
Hi,
Okay.
Rich. So one, it is in the name of the products itself.
Mhm.
I would like to, uh, you know, uh, delve a bit uh, deeper into how these loan products are designed,
Mhm.
and then we can get into an understanding as to what a personal loan is and what a credit card is. Neeraj, do you agree that bank is a business?
Yes.
Do you agree?
Yes.
So bank is there to make money.
Yes.
Absolutely, no.
Yeah.
They don't have any other agenda, correct?
No, no.
They're not into charity. They're not into. They're not a foundation,
Mhm.
or they're not working for a social cause,
Mhm.
etc., etc. Right? Bank
Correct.
is a business,
Correct.
and when it's a business, they're here to make money.
Mm.
Correct?
Mm.
If they have to make money, then they have to address the needs or the requirements or the wants of a consumer.
Mm.
Okay, right? No, all their
Yeah, of
services and
course.
products
Mm.
should match a massive category. I mean, it shouldn't be the need or a requirement or a want of a single guy, one consumer. It should be a large base requires this,
Mm.
wants this,
Mm.
correct? That's when the product becomes a hit, a service becomes a hit, correct?
Correct.
So, bank will have a market research team who would analyze what are the kinds of needs in terms of money people have.
Mm.
Okay. For example, I have to get married. To get married, I require money, right?
Yes.
Do you think without money marriage can happen?
No.
Too
Not for
many.
now.
There are too many things that comes into picture
Mm.
when it comes to marriage. Then it's a personal thing, right?
Yes.
Marriage is a personal thing.
Yeah.
So that's where they came up with personal loan, okay, which
Mm.
can be used for my personal affairs.
Okay.
Okay. Let's assume I have to get into a college,
Mm.
a big college,
Mm.
and the entire education. To complete the education, I require 40 lakh rupees or 20 lakh rupees.
Okay.
So I don't have, my parents do not afford to pay 20 lakh rupees in cash or just like that. Then there is an education loan. Bank came up, bank saw this as an opportunity. Bank saw that a lot of people cannot afford to pay that kind of money. Then they said, we will give you education loan. You pay after getting out of college, take a job, get a job, and start paying loan. They came up with this product based on the needs of a consumer,
Mm.
right? Then a lot of people wants to have their dream home. They saw the need, they saw this requirement. Then they came up with housing loan. To run businesses, you require money. They
Yes.
saw the need. Then they came up with varieties and varieties of business loans.
Mm.
For farming, for a farmer, requires money. Then they say farm loans, varieties and varieties of farm loans.
Mm.
Correct? They saw the requirement or a need that people might require money.
Mm.
Might require. I walk into a shopping mall, my mind goes, everywhere. Desire shoots up.
Mm.
I want this, I want that, I want this.
Mm.
For all these wants, I require money. This is a might require money. That need wasn't there. Now the need has come. Then that's the reason bank came up with this product called credit card. You
Okay.
understand?
Mm.
So this is the reason bank came up with this product called credit card,
Mm.
wherein people might require money. Bank is telling people that I'll give you free money for 40 to 50 days.
Mm.
After that, I'll charge you left, right, and center.
Okay.
So this is how they came up with multiple different, based on the need.
Mm.
They came up with different kinds of products. So personal loan they came up with for all the personal affairs. Okay, it might be a marriage, it might be some sort of program, it might be buying this, buying that, right?
Yeah.
People take personal loans to afford a honeymoon these days, foreign vacation and such things.
Correct.
Okay, personal loan is a short term loan, right? It ranges, I'm really not sure of the term, but 18 months to 5 years.
Yeah, maximum is 5 years.
5 years. I think it starts from 18 months. I'm not sure, because if you take 10 lakh rupees, I think a lot of banks go up to 20 lakh rupees, because personal loan is an unsecured loan. There is no collateral backing to personal loan. So they go up to 20 lakh rupees based on your income.
Okay.
And your credit report or your credit history. I think they can go up to 20-25 lakhs because it's unsecured. Higher the exposure, higher the risk. If banks give me 50 lakh rupees unsecured, if I run away, banks lose 50 lakh rupees. That's the reason they don't expose on the higher side.
Okay.
So this personal loan comes with a tenure. It ranges from, as we discussed, 18 months to 5 year. It comes with an interest rate. Generally it ranges from 12 to, depending on the banks, to NBFCs, I think up to 16-18%, 10 to 18%. And you have to pay EMIs every month, based on the tenure, or for 18 months or 5 years.
Okay.
And you have to clear your personal loan. That's how the personal loan works. Credit card is usage basis. Okay, bank will give you credit card with a credit limit. Credit limit can range from 25,000 rupees to 5 lakh or 10 lakh rupees based on your profile. Okay, they expose the credit. Okay, and you can use this credit card for all sorts of needs wherever credit cards are accepted. Correct? And they give you credit. The credit period. There is a free credit period of, it depends. So credit card has 2 dates. One is the billing date and second is the due date. Right after billing date, if you take money, then you can get credit up to 45 to 50 days, in that range. And you have to pay within the due date. If you do not pay, then they give you an option to pay minimum balance. This is where they make money.
Okay.
So credit card, people, you need to understand, comes with huge interest rates. It ranges from 36% to 48%, I think, which means monthly, if you calculate it on a monthly basis, it's 3 to 4%. 3 to 4% is huge.
Immense.
It's huge. So in that minimum balance, for example, I have swiped 50,000 rupees. I don't have 50,000 rupees to pay within the due date. Then they'll ask you maybe 5,000 rupees or 6,000 rupees. In that minimum balance, there are 2 components. One is principal, the other one is interest. The interest component will be on the higher side. Principal will be really, really less. Like out of the 6,000 rupees, for 50,000 rupees, if you calculate 4%, 10% is 5,000, 5% is 2.5, 2,000 rupees will be interest. Okay, so minimum balance will be less than that. I think they'll ask you for 4,000 rupees. Another 2,000 rupees will go into principal.
Okay.
So 2,000 rupees will go into
just the interest component.
Just the interest component per month. I'm saying per month.
My God.
Yeah, so you need to be really prudent in terms of credit card usage. If you mount up the debt, then it will start haunting you, because the debt can multiply in no time, and that will result in a debt trap. Yeah, we have already discussed about debt trap. I think you can understand what is debt trap by watching
the previous
video, or we can link it.
Yeah, sure. And one more question a person asked me, that let's suppose I want 2 lakh rupees
Okay.
instantly. So I have 2 options. One is personal loan and another is credit card. That person has 4 credit cards and each limit more than 1 lakh rupees. So he asked me that for now I'll take some 2 lakh rupees. I'm sure that by the 60th day or the 30th, after the 3 months, I will be having that money in my account. I'll clear it off. So at that time, what will you say? So,
See, now these days, credit card also gives you multiple options. If he takes 2 lakh rupees from a credit card, a lot of these card companies give him an option to convert to EMI. So, but he should check the interest rates, I'm saying. The convert to EMI will reduce the interest rate. That will act as a personal loan itself. I think if the interest rate pairs with the interest rates of a personal loan, he can straight away convert it to EMI. If the interest rates are really on the higher side, I would suggest rather than paying so much money here, you can go for a personal loan itself.
Okay. So
if it's really quick and if you can afford to pay within the due date, straight away swipe your credit card.
Okay.
If the urgency is more, and these days, the application to approval TAT has been really reduced because a lot of app loans have come, and they straight away take your digital KYC, get the entire underwriting done digitally, and they have cut down this application to approval ratio. The turnaround time, so you can get quick personal loans.
Okay.
But you should always be watchful of these interest rates, processing charges, penalties, and all these. People. RBI has mandated every NBFC, every bank to publish key fact statement of every product that they have. Before accessing any credit product, please check the key fact statement. The key fact statement describes all sorts of charges that this particular product comes up with.
Okay.
Then you have a very clear visibility of what are those charges that can arise by accessing this particular product. You have a very clear view. Based on this, you can make a very clear decision.
Okay.
Yeah.
Got it.
If you're not in hurry, if you're not in desperation, you can take all these. You can take a prudent decision. If you're in desperation, you will always end up taking a desperate decision.
Okay.
And desperate decision always results in disaster.
True. So, audience, one thing you must understand that credit card is an instrument made by banks to make money. It's not a charity or something else.
Right.
So you have to understand that bank makes money only by lending you money. So
Correct.
Be cautious. So before taking any such credit thing. Okay. Want to add on something, sir?
That's it. I think, as you said, be cautious. I mean, before I would say be prudent. I mean, take money only if you require. Otherwise, don't take any credit. Only if you require, only if you can afford to take credit, take credit. If you are into business, definitely, yes, you require credit to make more money. Fantastic. You can afford to pay it back.
Okay.
If you simply take money, if you simply take credit, spend and see, and you have no clue, then it's trouble. You are inviting trouble, basically.
Okay. Guys, I hope you enjoyed the video. Do like, share, and subscribe Kenstone Capital. Bye. See you in the next video.